All right, guys, we got above 27K for the first time since mid-June. Goldman leads the Dow. Retail and travel lead the S&P. Let's get to Bob Pisani. Hey, Bob.
Hey, Carl. Essentially flat on the year. Remember, we're back 3230 is where the S&P was. We're essentially there. Take a look at sectors. Banks having a good day, as David mentioned. Now, they normally dip during this week when earnings season comes out. Up today, regional bank numbers were fairly good. Industrials leading, energy, so you see cyclicals up. Techs are lagging. Mega cap is sort of mixed this morning. Consumer staples also lagging. As Carl mentioned, the reopening stocks are strong. It's important to mention how these things are like ping pong balls, though. Most of these stocks, the big travel names that you see, the Hertz's and the United Airlines and the Carnival Cruise Line stocks, they're 30 to 40% off their June peaks and 60%, in some cases 70% off of where they were in February. So whenever you see these numbers, these big moves up in daily, remember, on a comparative basis, they're still pretty way down here. The market's got a problem right now. It's very confused on what it should be looking at. Look at the S&P. It's moved in a 100-point range in the last couple of days here, and we're sort of at the top end of that trading range that you see. But 100 points, 1,000 points in the Dow, that's a lot even by the standards that we've been getting used to in the last few months. So two things are competing for market attention. These are the 5 buckets we always talk about and what really moves the markets overall. The big thing is the treatment and vaccine story, and essentially what's happening if you look at the market, the message of the market, as Ron and Sano used to like to say, we're all in on a vaccine and a treatment. That's why the market's holding up so well. The problem is the reopening story, the other major mover. It's a reopen or a reclosing story. Lael Brainerd got a lot of attention yesterday, warning of that double dip in the economic activity. She has a lot of credibility out there, and that note was widely passed around about her comments here. A lot of debate on how intense the stimulus is. McConnell seems a little bit lukewarm on going towards over $1 trillion and maybe to the $2 trillion level. Nobody's quite sure what's going on there. As for everything else, China tensions, David mentioned this, it's ratcheting up. Reducing that special status for Hong Kong's an issue out there, and trade's an issue still floating out there. And as for valuations, well, what can you say? Most opinions on the street believe tech's overvalued right now. But in the absence of a complete shutdown, the market's saying we're putting all our chips on improved treatment and a vaccine, and valuation, okay. Listen, they're high, but interest rates are historically low. Where else are we going to go? That's kind of the market's attitude right now. As for the banks, just take a look here, all on the upside here. At least the opening was on the upside here. I think the key here is focus on the regional banks. U.S. Bancorp and PNC had higher provisions, but not as bad as Wells Fargo. That's a good sign. PNC updated their 2020 guidance. They're talking about a 2 to 5% decline in revenue. So already we can sort of see some trends here with regional banks. I talk regional, not the ones, the big money center banks that have trading operations. Here's some of the trends that are pretty clear already. There's higher provisioning for loan losses, although Wells Fargo is a bit of an outlier. Average loans are lower, the amount of loans. Fees tend to be a little lower, and that's an important part of their revenues for these regionals, and net interest margins generally are weaker. As for Goldman Sachs here, just remember, this is a trading operation. 50% comes from that global markets. That's the trading operation. It was 58% above analyst estimates. That's how far off the analysts were. And even investment banking, they were way off. And so this was a blowout quarter. Again, the key point here is Goldman Sachs does not have a lot in common with the regional banks like PNC or U.S. Bancorp.